Amazon is scheduled to report quarterly financial results after the stock market's close on July 31st, 2025. Investors are asking me if they should buy Amazon stock before the company announces those results or wait until after and then buy the company stock. I'm going to answer that question in this video. I'm also going to preview what investors should look out for from Amazon in the upcoming earnings release. I'll share with you my proprietary discounted cash flow valuation model for Amazon stock so you can see what I calculated as a fair value for this business today. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So in its most recent quarter, which Amazon updated investors on May 1st, 2025, they told us that net sales increased by 9% to $156 billion. That was compared to $143 billion in the same quarter last year. The most important segment for Amazon is AWS, and sales for that segment increased by 17% to $29 billion. It's nice to see that the company's most profitable segment is growing nearly twice as fast as the business overall, and it's becoming a larger and larger percentage of its overall business. Also, embedded in its overall, it doesn't break down the advertising segment on its own, but the advertising business is growing faster than even the AWS business, and advertising is arguably a more profitable segment than even AWS, although Amazon does not break out those results specifically. So, two lucrative segments for Amazon's business are growing faster than the business overall, which is making them become a larger part of the business, which is helping boost profitability for Amazon, something the company has done a great job of over the previous decade and 2 decades. Operating income in the most recent quarter jumped to $18.4 billion compared to $15.3 billion in the first quarter of 2024. So I already talked about some of the factors that are driving profit growth, which is that the advertising and AWS business are growing faster than the overall business, and those are more profitable segments. So as those businesses grow to become a larger percentage, Amazon's overall profitability grows. Additionally, its e-commerce business, which has generally been a very low margin business, even a loss leading business, has turned profitable, and very much so. And some of the reasons why this part of the business is growing more profitable is because of the scale. It's now reached such a scale that it becomes easier to serve these customers, or it costs less to serve each incremental customer. If you think about it intuitively, if there's already two Amazon customers on a street and you get two more Amazon customers on the same street or in the same neighborhood, those customers are more profitable because Amazon is already visiting that neighborhood to make deliveries, and if it has to make an extra delivery in the same neighborhood in the same day, it doesn't cost the company that much more. Also, Amazon has done a great job in logistics and managing the warehouse, the fulfillment side of the business to get closer to customers. And so packages travel uh, shorter distances, which is a win-win situation for Amazon and its customers. It's a win for Amazon because if the package is traveling a shorter distance, it costs less to transport that package. It's a win for customers because if it's closer to you, you're getting that package sooner. And the time of delivery is an important consideration when you're making a purchase decision. If you can get an item in 1 day versus 2 days, you're a lot more likely to purchase that item, which drives sales growth for Amazon. So the company has done a great job capitalizing on that win-win situation. So longer term, some headwinds and tailwinds. I shouldn't say longer term, but I should say bigger picture, headwinds and tailwinds. The big headwind is tariffs. The cost of sourcing the products on Amazon's website have increased substantially since April when President Donald Trump announced the tariffs. A very large percentage of the products that are sold on Amazon's website are sourced internationally. And the bulk of which coming from China, which faces the highest tariffs. So the cost of items are increasing on Amazon's website. I do the subscribe and save on Amazon for a few dozen items, and I noticed over the past 2 months, all of my or most of my subscribe and save items, the prices have increased, and substantially so, not just by 10%, but something like 20, 40, 50% in some cases. So I canceled a lot of those orders or subscriptions that had a big increase in price. I'm curious to see or hear from you all if you've been experiencing the same thing, if you're doing the subscribe and save feature on Amazon. That's one big headwind for the business. On the tailwind side, the cost of fuel has decreased meaningfully this year. And so a big cost for Amazon is fuel for transportation, fulfilling these orders. And that lower cost to serve customers is going to even help further drive down the cost for Amazon. Operating cash flow increased 15% to 114 billion in the trailing 12 months. 114 billion dollars in cash flow this business generated, a whopping amount. That allows Amazon to reinvest into the business at a scale that's unmatchable by any other business in the world. And they've done so incredibly well. Amazon is one business where their capital expenditures are north of $100 billion. Looking ahead over 2025, the management team told investors that they're going to spend about $105 billion on capital expenditures in 2025. Most of it for their data centers optimized for artificial intelligence, and then some of which for its logistics and fulfillment side of the business. Amazon's management team, I've thought, has done a phenomenal job with this business, navigating unprecedented circumstances both during and after the pandemic. I've ranked Amazon's management team as one of the best management teams of any company that I follow. And there was a lot of question marks when Jeff Bezos stepped down and Andy Jassy stepped in, but Andy Jassy has proven to do an excellent job here taking the helm at Amazon. Looking ahead, Amazon is forecasting net sales of $162 billion at the midpoint, which would reflect 9% revenue growth, and operating income to come in around 15 billion, which would be relatively flat from the same quarter last year. Now, since the company gave this forecast, many things have changed. The tariff levels have fluctuated, business spending has fluctuated, but one constant has been consumer spending, which has held up very strongly. People have continued spending money, even though we've started to see higher prices coming in for many of the products that we're buying. Consumers have kept spending, right? They may have switched some of the items, they may have made some choices, some substitutes, but overall spending has remained robust, and that's going to be good news for Amazon. Consumer spending fuels a lot of the growth here for Amazon. So second quarter revenue and profit numbers are likely to come in around where the management team has forecasted. I don't see any big changes that could lead to an outcome that's outside of what management has forecasted. The question mark will be for Q3 and Q4 when they provide the guidance for the rest of this year. Will they start to talk about tariffs and the implications on consumer spending, tariffs and the implications of the inventory they're seeing on their website? Are they noticing their sellers on the platform raising prices meaningfully? Are they noticing sellers removing items completely from the platform because of tariffs? What are they seeing on the platform, both in terms of consumers and sellers? I think is going to be very curious. I'm going to be watching that closely to get an insight into how businesses and consumers are responding as a result of tariffs. That's going to be a big indicator for the rest of the economy here, at least in the US. So, what about the buying or selling decision? Should you be buying Amazon stock before it announces these financial results? Let me start with sharing with you my proprietary DCF valuation. I calculated a fair value for this business of $243. The current market price is $226. So I would say this business looks slightly undervalued according to my DCF calculation. And then when I go to fiscal.ai, which is my preferred data source, they aggregate so much financial information. They save me so much time. There's a link in the description if you're interested. The forward PE ratio here is at 36. So I would say it's fairly valued according to the forward PE ratio. Now, Amazon is one of those businesses where I rank as, being in the Hall of Fame, one of the best businesses in the world. And I would be willing to pay a premium price for this business, but I can get it at a fair value because of the valuation. Now, I have Amazon rated as one of the best 9 stocks to buy right now. However, the decision between the timing of before or after earnings, I always say it's less risky to buy a stock, in the day or two after the earnings release. An earnings release creates big volatility in a company's share price, and I would have to see a significant undervaluation in order to want to buy a stock in the days before it announces earnings. And I don't see that with Amazon at current market prices. So already you get extra risk surrounding an earnings release, but on top of that, we have the big question mark surrounding tariffs. So Amazon is one business where at the current moment, I would wait until after they announce earnings, digest the results, and then make a decision about buying or selling the stock.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.